Hey everybody, it's Tracy. And a big question I get on crypto projects and fintech projects is the limitations regarding accredited and non-accredited investors and like how projects can fund with so-called retail investors, right? Because especially with crypto, right, given how accredited investors are defined both in the States and EU, it's usually a net worth or income qualification, like US net worth a million, not including your home, or income of 200,000 a year, 300,000 for a couple for the preceding 2 years. And with crypto, one, because you have the obligation to verify that income as a issuer, you'll find that a lot of crypto people don't want to do it, irrespective of whether they meet that level of net worth because of just really privacy reasons, right? And it's also a harder calculation to make, and you usually have to rely on tax returns and all these kind of things, and people are going to give you that for the most part. So how do you really do it? Well, the only real tangible way, right, especially within the EU and US, to raise money from retail investors is through crowdfunding, right? And so the question becomes, well, I want to create a portal, right, to actually promote, right, or sell these crowdfunded tokenized securities, right? And obviously with crowdfunding in the US, you have a limitation of 5 million over any given 12-month period, but you can sell to anybody, right? And you can use solicitation. And then the EU, depending on what country you're based in, it's basically the same thing with different variations of reporting. But in terms of registering as an actual portal, right? That's what I kind of wanted to talk about here today. So in the US, you've got Regulation CF, and registering as a funding portal is actually relatively easy because it's a basic sort of notice filing with the SEC, which is deemed effective the later of 30 days after the filing or when approved by the SEC. So typically less than 30 days. And then a registration with FinCEN, which can take a little bit longer, but usually not. And there's no fee for the SEC part. There's a $3,200 fee for FinCEN. The trick is, in order to be a funding portal, you have to partner with a licensed broker dealer, right? And the limitation of being just a straight funding portal in the US is the fact that you cannot earn commissions on sales. So like if you create a platform, a funding portal, and you've got different tokenized securities or just regular securities for that matter, you can't earn a percentage of what is sold through the portal, right? You can if you're a broker dealer and operate similarly. You can't as a funding portal. Moreover, as a funding portal, you cannot solicit investors to the issuers and the projects that you list on your portal, right? So really what you create is just really this like web or mobile access for people to buy the tokenized security, and in turn you just collect a fee for doing the listing, and that requires the issuer to like fund through the marketing. And there's been portals that have kind of tried to create these like sister companies that do marketing, but it's really never arm's length enough to comply, right? So you wind up having this sort of cost competition with a broker dealer who can solicit anybody. They typically have greater infrastructure and they can take a commission, right? As opposed to just relying on some upfront fee for you to list the project. So that's the part there, right? Now, EU, similar, right? Crowdfunding service providers, each member state has its own slightly different registration. I like Cyprus's the best, and it's good throughout the EU. And then outside the EU, UK is still sort of relying on pre-Brexit regulation. So it's basically the same. The third option, right, is sort of like the offshore, unlicensed crowdfunding option, portal option, because crowdfunding is really unique to the US and EU, right? Like you're not going to see it in an offshore domicile because ultimately they don't care, and their limitation would be don't sell to persons in the domicile in which you're registered. So, like BVI, right? Like you're simply not going to sell to anybody in BVI, because then you're going to trigger BVI securities laws, which don't have a provision for something like that. And they have different investor sophistication standards. And, my recommendation on that is basically like in the offshore context, right? Especially with crypto, there isn't an optics problem, right? I think it's all about trust, right? It's all about like the redundancy and, how you're viewed and who's behind it and the transparency with which you operate. But on a very technical level, well, not even on a technical level, you are going to trigger US registration rules, right? If you're selling to US or your platform is available to US persons. EU, there's some jurisdictional arguments that you can say, well, this is outside the ambit, and you're going to find that EU regulators aren't really going to come knocking down your door, right? But in the offshore context, for like a crypto security token context, stay away from the US, right? Like that would really be your only limitation, which granted is a fairly significant limitation in so much that it's such a big market, but it's also the easiest setup, because what do you really need? A company, right? Because there's no license to get, there's nothing to get, right? It's just really like the documentation and the website, right? And the actual portal itself. And, no matter which direction you go, right? Whether it's the US, EU, or offshore, right? And as far as like offshore, you can really pick really any jurisdiction, but just as long as you're not acting as like a broker, right? And I could go down a rabbit hole with that, but I won't. The big thing is like this: you're selling tokenized crypto securities, right? There's nowhere for these to go, right? Like even to this day, if you go on like Republic, which I've used to invest little amounts here or there, or Indiegogo, stuff like that. Well, you put in $100 and you get like the scooter or whatever, bullshit these people, they're trying to peddle, right? Because there's no liquidity. Like there's no inherent exit. You're selling shares in a private company. And at least in the context of like traditional equity, those companies actually have a route, whether they elect to follow it or not, to become publicly traded. So there is liquidity in the shares that they're selling at some point in time, right? And they're also very early stage, so maybe 5 years, maybe never. And most often will be never, but there's that liquidity. Right now for security tokens, right, there isn't enough markets, right? In the US, you could file a registration to do an IPO. Good luck, right? But even if you got through it, right, which would take a long time and a lot of money and audited financials and all this kind of stuff, there's nowhere for the token to trade, right? So it's like, it can't trade on Coinbase. They're not licensed as a national securities exchange, right? Same could be true for Europe. There's some like offshore attempts and there's some ATSs in the US, but they just don't have the liquidity. There's like institutional players involved, but like rank and file, you and me, we're not trading our shares out, our tokenized securities out. So, before you go down that road, right, of like, we're going to be this funding portal for crypto projects and focus on security tokens, you got to kind of question, like, what's the real value that you're adding, right? Like, you can collect fees. I'm not saying the model doesn't work. You see, there's a lot of them. But at the end of the day, you're 100%, as it stands this instant, the issuers that come to you and pay the fee, right, they are 100% only going to offer their investors a return if and only if they make money and decide to pay a dividend, right? And that is a whole nother video for another time, because that's on the issuer, not you. So the question becomes, does that model dry up, or is it starting to dry up as people who invested in these crypto projects 3, 4, 5 years ago are realizing that they literally got no benefit but maybe the free scooter? So that's my take. Definitely check me out. Let me know if you have any questions. Adam at AdamTracy, TRACY.io. And I'll talk to you next time. Cheers.